another. All right, so guys, just starting out. This is the term insurance overview, so that you guys can get a foundation of the term insurance products that you're contracted with, and that we like to offer here in the Smith and Yonest hierarchy. Okay. So just a quick overview. We're going to go over what is term insurance, what are the different types of term insurance, who is term for, how does the underwriting for term insurance work, how much does term insurance cost, how much coverage does my client need, and then who offers term insurance. Okay, so first and foremost, just a basic definition. The way that term insurance works is very simple. Instead of covering you for the rest of your life the way a permanent policy would, it's going to cover you for a specific amount of time, such as 10 years, 20 years, or 30 years. Some carriers have 15-year terms, some carriers have 25-year terms, and it pays out if and only if you do pass away during the term of the policy. So in essence, you're kind of gambling against yourself a little bit. There is a chance that you could pay all of this premium, and essentially if you outlive the term, you don't get anything for it. But hey, that's how all insurance works. Car insurance, you're paying that every single month, praying you're never going to use it. Homeowners insurance, you're paying every single month, hoping you're never going to use it. So it's not a new concept with insurance, but obviously with a permanent plan, with a whole life plan, no matter what, it's going to cover you to the end of life and you're going to get a payout. So there's a couple different reasons that you would want to have a term plan, a couple different life situations. First and foremost, buying a home. A very popular plan out there is a mortgage protection plan, where essentially you buy a term insurance policy that matches the amount that you own on the mortgage and how much time you have left. So if you're the breadwinner in the home and God forbid you pass away, your beneficiary, typically a spouse or a family member, is going to get a payout that matches exactly how much you have left on the mortgage, so that's just paid off 100% for you. Another popular time in someone's life is when they get married. Again, you get married, maybe you're the person that brings home the paycheck in the house, and God forbid something happens to you. You don't want your spouse to have to struggle. Having a baby is another time. Again, it's just more people potentially depending on someone who's the breadwinner in the household. And then aging family members. So typically, when someone's looking for a policy to help cover end of life costs, they'll look at a final expense whole life plan. But there are some situations where you could, instead purchase a term product that maybe is a little bit more affordable. There are term plans that aren't 20 or 30 years. They're just simply up to age 100 or up to age 95. And we'll go over some examples of that. So a term product can also be used for final expenses as well. So to touch on that a little bit more, I mentioned it there briefly, but just to put it right here in writing, these are the different types of term insurance. There's mortgage protection, there's income protection, there's legacy protection, final expense protection, education protection, and key person protection. So mortgage protection, pretty straightforward. You just heard that explanation, right? You get a term policy that matches the mortgage on your home for the amount of time that's left. Income protection would be, I look at how much money I make every single year, and then I choose how many years I want to insure that income, and God forbid I pass away. So if I make $100,000 a year and I want to leave behind my beneficiary, my spouse, whoever it may be, 10 years worth of my income, then I'm going to get $1 million policy, right? Legacy protection. If I want to make sure that I leave money behind to my heirs or my children, I determine how much money I want to leave behind as a legacy, and that's how much my benefit amount would be. Final expense protection, again, typically we would be looking at a final expense whole life plan so that they're guaranteed to have that payout. But with the term to age 95 products, with the term to age 100 products, essentially you can meet that same demand, and that policy is designed to cover those end of life expenses. Education protection. If I know that the cost of a college education for my child for an in-state tuition is about $20,000 a year, and there's 4 years worth of college, maybe I get an $80,000 policy. So if God forbid something happens to me, my child is going to get that money, and then we'll be able to cover the cost of their education to replace the income that I otherwise will not have been able to provide to them. Key person protection. This is usually for a business. So, if somebody within the business is, sort of the CEO or is the person that really drives that business, and you know that if that person were to pass away, that it would cost you something for the business to A, replace them, and B, the lost revenue that maybe that person was bringing in and otherwise now will not be able to. You can purchase a key person protection plan, try to figure out exactly what that person is worth monetarily, and then put a policy on that person with yourself or the business as the beneficiary, so that they receive that, God forbid, that person passes away. So those are the different types of term insurance that people will be coming across the phone looking for. Moving on, who is term insurance for? So it's going to be for ages 18 to 80. They're going to have to be either a United States citizen or a permanent resident. They need a social security number. Typically, parents and spouses interested in leaving a legacy are a good candidate for a term insurance policy. Again, whole life is a little bit safer. It's going to guarantee that it's going to pay out. But obviously with term insurance, you're going to be able to get more coverage for a potentially lower premium than a whole life plan. People in good health or with pre-existing conditions can qualify for a term plan, so they don't have to be in perfect health in order to qualify. So either healthy or with pre-existing conditions is fine. They can be insured or uninsured. So don't think just because somebody already has a policy in place that they can't get another policy. You can never have too much money. So they can be either currently insured or uninsured. That's fine. We're not necessarily trying to replace coverage. So if they're currently insured, we're not necessarily trying to replace it, but add in addition to it. And then again, as touched on earlier, term insurance is great for people who want income protection, to make sure that they have protection during their wage earning years before they've really built their nest egg and built their retirement. So income protection. And then again, also somebody who maybe has 30 years on a mortgage at $500,000, get them a 30-year term, $500,000 worth of coverage, and it just matches up perfectly there for them. So those are the few of the candidates. I'm sure there's probably more, but that's a pretty good list as a foundation. How does the underwriting work? So again, the level preferred, tomato, there's standard and there's modified. And so standard and modified are going to be like tobacco rates. So if someone's a tobacco user, or if someone has some pre-existing conditions and they're not going to qualify for the preferred rate, they might qualify for the carrier standard rate, which is going to be more expensive, or they might qualify for a modified plan, which is usually it's more expensive and less benefit. So there's a few different underwriting classes. Those are the main ones there. It is simplified underwriting for the plans that we're recommending. You will have options for full medical term plans. If it's absolutely necessary, we can look at those and give you some guidance on which ones to target. But generally, you're going to be looking at the simplified underwriting plans. There's no blood and lab work required. There's no paramedical exams. There'll be a list of medical questions they have to answer in order to determine eligibility. And then, of course, the carrier is going to do prescription and MID check. There's no guaranteed issue options. So unlike the final expense plans, there's no guaranteed of coverage on a term plan. And then they do have graded benefits. So the full death benefit of the policy is suspended for the first 2 to 3 years unless the death is accidental. Instead, the beneficiary is going to receive premiums paid plus 10%, or in some cases 15%. Prosperity Prime Term uses graded underwriting. So that's an example of a carrier and a product that has a graded term plan that we really like. Okay, how much does term life insurance cost? So I did an example of 30 years, and this is in the state of Florida. So for a 45-year-old man to get a 30-year, $50,000, it's $30 a month. You'll see females a little bit less at $25. When you bump up to 100,000, now we're looking at $55 a month for a male, $38 for a female. Going up to $250,000, we're at $122 a month for a male, $84 for a female. $500,000 is $238 a month, and $161 for a female. And again, this would be with a simplified issue plan. This would not be with medical exams. This would not be fully underwritten. So pretty quick approval process. They'll definitely be issued and approved, much faster than having a nurse come out to the home doing a full medical. So that should give you a ballpark. Females are always going to be less expensive, right? And again, if somebody's a little bit older, costs a little bit more, a little bit younger, a little bit less. You'll use your universal quoting system. You'll quote quote the information the same exact way you would with a final expense plan. You put in their age, you put in their data, their zip code, their state, and so forth. Put in their pre-existing conditions, and then it'll show you the carriers that they qualify for and at what price. Moving on to the next slide. Okay, how much coverage does my client need? Here's a little easy, simple worksheet that you can use that'll help you kind of ballpark for somebody how much coverage they should be thinking about, because in some cases they don't know. They know that they want life insurance, they've identified that they need it, but they don't necessarily know exactly how much they need. So very simple little worksheet here. It's a amount they need to pay off any outstanding debt. So they should think about how much debt they have, whether it's, as some examples there, auto loan, credit card, student loan, final expense costs, and so forth. Take a look at their income, how much they're making a year, and then make a decision about how many years of income they want to leave behind to their beneficiary. Whether it's 5 years worth of income, 10 years worth of income. Think about how much they owe on their mortgage. Make sure that, if it's affordable, to have that mortgage be able to be fully paid off if they do pass. And then thinking about education for their kids, if they have kids, how much money that's going to cost approximately. Good example is to take a look at what a state university charges for in-state, and that would be the minimum. They live in Florida. I think that there's state institutions that their annual fee, I believe, was like $6,000 or $7,000, but it depends on your state. And then, of course, any assets, what the value that they can be converted into cash is, and you would actually subtract that. So if they've got some major assets, they wouldn't necessarily need to add more money. You could actually take some money away, because that could be converted into cash and reach that number that they want to make sure they're covered. And then you add those up, subtract your assets, and that's how much coverage you can, very safely and easily recommend that somebody has. So here's some of the names that you'll be looking at. Americo, Kansas City Life, Mutual of Omaha, American Amicable, Transamerica, National Life Group, Ethos, Emeritus, Royal Neighbors, Foresters, Prosperity, AIG. A lot of familiar names from the final expense side, a couple of new ones. We'll go over in a little bit more detail here in a second, the product offerings that these carriers have. Starting out with Mutual of Omaha, here's their most popular term plan. It's the Term Life Express. It issues ages 18 to 70. Benefit amounts are $25,000 to $300,000 based upon approval. It's underwritten, but there's no medical exam, so it's simplified issue. They have options of 10, 15, 20, or 30 years. They have living benefits included for no additional cost in the plan. They have an accelerated benefit, so 92% of the face amount if given 24 months to live or less. That's on their ROP plans only. If you opt for the non-ROP plan, that would be a terminal illness, chronic illness, and critical illness built into the policy. So an ROP plan essentially means return of premium. So there are riders that you can add on to these term policies that if the insured outlives the term, they can actually receive a return of their premium at a certain percentage, whether it's 50% of what they paid in, 75%, all the way up to 100%. Okay, so that's pretty cool. And then Mutual of Omaha is EFT only, meaning electronic funds transfer only. You won't be able to accept a credit card. Another popular product that I personally recommend is the American Amicable Term Made Simple. Issue ages are 18 to 75, and this is a term to age 95. So essentially, it does have a 10, 15, 20, or 30-year level premium. So that means that if you choose the 30-year option, they'll have the same premium for 30 years. After those 30 years, the term does not cancel out. It does not close out. It doesn't terminate. They'll be covered all the way up to age 95 on an annual renewable term, but that means that their premium is going to go up each year. Okay, but obviously now they have a policy that covers them all the way up to age 95 without having to go through underwriting again. So if they're not able to qualify for anything else, at least they're guaranteed to now be covered all the way up to age 95. The term that you're choosing, whether it's 10, 15, 20, or 30 years, that just means that the premium is going to be level for that many years. Okay. It goes between 50,000 to 500,000. Again, simplified issue. So it's underwritten, but no medical exam. Again, you have to have a checking account. And then another cool option that this plan has is it can be converted to a whole life plan without evidence of insurability at any time. Okay. So again, if somebody is during this term has fallen ill and they're not going to be able to qualify for another plan, they can convert it into a whole life so that they're covered all the way to end of life. There's also some living benefits included for no additional cost. Terminal illness, so up to 100% of the face amount if given 12 months or less to live. So why is that valuable? That's valuable because they can actually get the money right away, and then they can handle final expenses and so forth ahead of time and not have to, pay for the funeral costs, pay for all these costs before, and then get reimbursed later. They can get that money accelerated to them. Now they've got their final expense money in hand, handle all of the final affairs, and then there's no, waiting for the benefit later on after you've already covered those costs. So that's how you can, recommend and sell the value of one of those types of living benefits. Get that money up front so that you can cover those final expenses ahead of time and you're not waiting for a check after the person passes away. They also have a confined care living benefit. So 50% of face amount on immediate death benefit plan if confined to a nursing home for 90 days and is expected to remain for duration of life. So if you've got a $500,000 policy, you can get up to $250,000 accelerated to you so that you have those costs to help cover, again, settling the estate, leaving that legacy, end of life costs without having to wait for that money. Maybe you don't have money for a nursing home, right? Get that money from your policy. All right. So cool plan, pretty simple underwriting, very easy application. I definitely recommend that policy. Okay. Easy term. So this is essentially a very similar plan to the term made simple, but you'll see that the benefit amount is lower, and otherwise it's also a little bit easier to qualify for. And then it also has return of premium option. So again, if they outlive the term, they can get a portion of their premiums returned to them, which is a cool benefit. It's still going to be term to age 95. So it's a level premium for 10, 15, 20, or 30 years. But then no matter what, it turns into an annual renewable term all the way up to age 95. This one can also be converted into a whole life without evidence of insurability. And it also has those two living benefits of terminal illness and confined care. So again, the main differences between this and the term made simple, a little easier to qualify. As such, the benefit amounts offered are a little bit lower, but you also get that optional ROP rider where they get the return of premium if they outlive the term. Has those living benefits, can be converted into a whole life, and then it covers them all the way up to age 95 on an annual renewable term after the initial 10, 15, 20, or 30 years is up. Okay. Home protector. So this is essentially just another traditional term plan, but it's really being branded as home protection. In order to qualify for this plan, they have to actually have a mortgage. So there's no reason to sell this policy to somebody. If they don't actually have a mortgage, they wouldn't qualify for it anyway. But you can see the issue ages are a little bit lower. It's 20 to 65. The benefit amount, 25,000 to 300,000. It's going to be a level premium term, so 10, 15, 20, or 30 years. They also have return of premium terms, 20, 25, or 30 years, and it returns up to 75% of their premium. But again, the policy is going to be an annual renewable term to age 95. So after that term runs out, the policy doesn't terminate. They're covered all the way up to age 95. They've got living benefits of chronic illness, where total of premiums paid up to 50% of face amount if applicant cannot perform 2 out of the 6 activities of daily living. And then terminal illness, 50% of the face amount if given 12 months or less to live. And then it is convertible to a whole life before the end of the term or before the 75th birthday, whichever comes sooner. So a little bit different than the other two. This one, you have to convert it before the term comes to an end or your 75th birthday, whichever is sooner. Okay. Bank account only, simplified underwriting, but no medical exam. And again, it's really branded as mortgage protection. But at the end of the day, it's just a term plan, right? But what's cool, again, is it's branded for mortgage protection if that's specifically what the customer is looking for. And it has these ROP options, return of premiums, which returns up to 75%. Okay. So another product from American Amicable, they really just have a full array of different options. This is called the Survivor Protector. This is really an income protection plan more than anything else. So essentially, they have a benefit amount of 25,000 to 300,000, but it's not necessarily that they're going to just get 300,000 when you pass away. Essentially, they get a monthly benefit that's designed to replace income. The maximum would be $2,145 per month. So essentially, that's about $25,000 per year. And what happens is that they're going to get that monthly benefit for the remainder of the term. So if you have a 30-year term and you pass away in the 25th year, then essentially your beneficiary is going to get $2,145 every month for the next 5 years. Okay, so it's really trying to replace income. It's not necessarily, hey, give my spouse a $300,000 payout. I just want to have a certain monthly benefit and make sure that she has enough money to pay her bills if I pass away before such time that maybe our retirement has gotten to a point where she can draw an income. The benefit of this is that it's more affordable. It's going to be less expensive than a traditional term plan. So if it's just not affordable for somebody to have a bigger, a traditional term plan that's going to pay out that full benefit amount, they can opt for the Survivor Protector, which you'll see when you run quotes for term plans, and you're going to see that it's less expensive than a traditional term. And it just is kind of nice, if maybe the person who's purchasing the plan knows that who they want to leave the money to isn't necessarily the greatest at managing money and wants to make sure that they just get exactly enough money to cover their bills each month, or this is designed to supplement maybe whatever they're able to make on their own. This makes sure they get that set amount and they can't kind of blow the whole shebang really quickly if they just get a big $300,000 payout. So it kind of protects against that. It does have some living benefits here of a terminal illness, so up to 100% of face amount if given 12 months or less to live. The term options are going to vary based upon age, so not everybody's going to qualify for a 30-year term, but you can also just get a term up to age 70. So it's not necessarily you choose 15, 20, 25, or 30. It's just, hey, I want this policy to cover me till age 70. And then it is convertible to a whole life before the end of the term or before the 75th birthday, whichever comes sooner, as we've seen on another plan. Okay, Transamerica. This is going to be an option for those clients out there that maybe want more than 300,000, 500,000. You'll see this goes all the way up to $2 million worth of coverage, simplified issue. Okay, so that means no blood and lab exam. There's no nurse coming out. They may qualify all the way up to $2 million without having to do that. Terms are 10, 15, 25, or 30 years. You can see they do have some living benefits as well. So Trendsetter LB stands for Trendsetter Living Benefit. So this is designed to have living benefits for people that could potentially be a huge amount. So if somebody experiences a chronic or critical or terminal illness, such as a stroke, a cancer, a heart attack, or paralysis, they can get all the way up to $1.5 million of their policy accelerated to them. So really cool benefit, really high potential payout. And again, those living benefits are built right into the premium. Premium can be, or benefit amount can be as low as $25,000. They do take bank account and direct express card. And just a training point, when you're quoting this in the universal quoting tool, if you enter in the height and weight, it's not going to display the premium for you. So the quoting tool is not taking into account their health at all. So just be mindful of that. If you put health conditions in there, medications, or height and weight, it's not going to show you the premium. So if you want to get that separately, essentially run all the quotes, take a look at their options, then maybe open up another window even and run that quote separately, and don't put any pre-X or any height and weight. and you'll be able to see how much coverage they can potentially qualify for and at what price. So again, for your clients that are looking for, a high face amount, this is going to be your best option. Moving over to Prosperity, this is their family freedom term. 18 to 75 are the issue ages. You got 10, 15, 20, 25, and 30 years. It's convertible to a whole life during the first 10 years of the policy without requiring evidence of insurability. Benefit amount 50,000 to 500,000. It's underwritten, but it's simplified, so no medical exam. You have your bank account, Direct Express, and credit debit cards that are accepted. Remember that its commissions are as earned if you use anything other than an EFT. Living benefits included for no additional cost are going to be the ability to accelerate a percentage of the policy's death benefit if the insured is diagnosed with a terminal illness, critical illness, or chronic illness. This one also has a voice signature for those clients out there that are going to struggle to do an e-sign. Prosperity has a voice signature as well, which can be helpful. And then Prosperity also has another product called the Prime Term, issue ages 40 to 80. Essentially, it's a 20 years, and then it's a decreasing term to age 100. Okay, so they get 20 years of level premium, level benefit. After 20 years, that benefit is going to decrease each term, so each year. So this is really a term plan that's designed to sort of cover final expenses, more or less. It has a graded death benefit for the first 3 years. So year one, if they pass away, their beneficiary will get the premiums paid plus 15%, which is better than most of the graded benefits out there. Most graded benefits are going to be premiums paid plus 10%. Year two, they're going to get 30 to 40% of the face amount. That really depends upon their age when they enroll. Year three, 60 to 70% of face amount. And then finally in year four, it's the full benefit amount. So essentially, this is a good product for somebody who can't qualify for anything else because they're in poor health, but their pre-existing conditions aren't necessarily terminal, because they'll need to wait 4 years before they get the full death benefit. But it's still a great value because, again, they're getting 15% return on their premium the first year. That's really good. And then years 2 and 3, it's 30 to 40 and 60 to 70% of the face amount. It's really easy to qualify for this plan. Essentially, the only medical questions are they can't be terminal, so they can't have been given 2 years or less to live. They can't currently be confined to a nursing home, and they can't have had any critical illnesses diagnosed in the last 2 years. That's going to be generally cancer, heart attack, stroke, organ transplant, congestive. I think congestive heart failure is actually okay, but things along those lines. You'll see on the application the specific questions, but that's the good general rule. They accept, obviously it's Prosperity, so they accept a bank account, Direct Express card, and credit and debit card as earned. Again, if commissions if the EFT is not used. So if you use a credit card, debit card, or Direct Express, it's as earned. Does have some living benefits, so ability to accelerate up to 50% of the policy's death benefit if insured is given 12 months or less to live. Again, I spoke about the value of that. That way they can get the money up front, handle their final expenses, handle their funeral costs without having to wait for the money on the back end. So those living benefits are really, really valuable. Okay. So that's going to bring us to the end of the term insurance training.